Right now, while everyone else is watching their portfolios turn red and panic selling at the worst possible time, a small group of investors is doing something completely different. They're not scared. They're not rushing for the exits. They're quietly building positions in 3 specific areas of the market that almost nobody wants to touch right now. And here's what makes this moment so critical. These aren't gambles. These aren't meme stocks or hype plays. These are real businesses, real assets, trading at prices that simply don't make sense when you actually look at what they're worth. I'm going to show you exactly what smart money is buying, why the math works, and how you can think about these opportunities the same way professional money managers do. But I need you to stick with me through this entire breakdown, because the biggest mistake you can make right now is acting on incomplete information. If you're serious about building real wealth in the stock market and you want analysis that goes deeper than clickbait headlines, you're in the right place. This is Market Authority, where we focus on the fundamentals that actually matter. Go ahead and subscribe now, because we're about to get into some insights that most channels won't share with you. So let's talk about what's really happening right now. The market isn't crashing. The major indexes are only down a few percent from their highs. But underneath that calm surface, there's absolute chaos. Stocks that everyone loved just months ago are down 30, 40, even 50%. Former winners are being treated like they're worthless. And this is where most people get it completely wrong. They see red numbers and assume something must be fundamentally broken. They panic, they sell, they lock in losses. But here's what they're missing. Price and value are not the same thing. Think of it like this. If your favorite restaurant suddenly put a 50% off sign in the window, would you assume the food got worse, or would you think you're getting a deal? Most people in the stock market do the opposite. They see the discount and run away. That's backwards thinking. Just because a stock price drops doesn't mean the actual business got worse. Sometimes the business is doing exactly what it was doing before, but fear takes over and prices get pushed way below what the company is actually worth. That gap between price and value, that's where opportunity lives. Now, I'm not telling you to blindly buy every stock that's down. That's a recipe for disaster. What I am telling you is that there's a framework for finding opportunities when prices disconnect from reality. You need to look at free cash flow, which is basically the money a company has left over after paying all its bills and investing in its own growth. You need to understand the business model. You need to ask yourself, is this company going to be worth more 5 years from now or less? Because if the answer is more and the price is deeply discounted today, you found something worth paying attention to. So let's start with the first opportunity. And I'm not going to reveal what it is just yet, because I want you to understand why this works before I tell you what it is. Imagine a sector that powers almost everything you do in your daily life. When you check your email, when your company stores data in the cloud, when businesses run their operations, when artificial intelligence processes information, all of that runs on infrastructure that most people never see. It's not flashy, it's not exciting, but it's absolutely essential. Companies can't function without it. And here's the thing, the businesses that provide this infrastructure haven't disappeared. They're still growing, they're still generating cash, they're still profitable. But their stock prices have been absolutely destroyed. Some of them are down more than 30% in just a few months. Now here's the question you need to ask. Did these businesses actually get 30% worse? Did companies suddenly stop using the internet? Did the digital economy reverse? No, none of that happened. What happened is that investors got scared, and when fear takes over, logic goes out the window. Let me tell you what I'm talking about. This is the software and technology sector. The companies that build the platforms, the cloud services, the enterprise tools that the modern economy runs on. And right now, nobody wants to touch them. The sentiment has completely flipped. People who were bragging about these stocks 6 months ago won't even talk about them now. And that emotional shift is exactly what creates opportunity. Let's talk about the actual numbers for a second, because this is where it gets interesting. Many of these companies are still growing revenue. They're still generating free cash flow. And that's the real measure of whether a business is healthy. If a company is bringing in more cash than it's spending, the business is working. And right now, you can buy some of these companies at valuations that would have been considered absurd just a year ago. We're talking about businesses trading at 15 or 16 times their free cash flow when they were trading at 25 or 30 times not long ago. That's like buying $1 for 60 cents. It doesn't make sense, but it's happening because fear doesn't care about math. Now, I'm not going to sit here and tell you that every software stock is a buy. Some of them deserve to be down because their growth is slowing or their profit margins are getting squeezed. But as a sector, software has been beaten down so hard that the good companies are getting thrown out with the bad ones. And that's the opportunity. You can get exposure to this entire sector through a broad index fund, or if you want to be more selective, you can look at individual names that have strong balance sheets, consistent free cash flow, and reasonable valuations. The key here is patience. This isn't a trade you make today and sell next week. This is a position you build when nobody wants it, and you hold while the market comes back to its senses. History shows us that when a quality sector gets this oversold, the snapback can be powerful. 6 to 8 weeks from now, when sentiment starts to shift and people remember why these businesses matter, you'll be glad you acted when prices were still depressed. If you're finding value in this breakdown, do me a favor and drop a comment below. Let me know if you're looking at this sector right now, or if you think I'm crazy for even suggesting it. And if this video is helping you think differently about the market, share it with someone who needs to hear this. It really helps Market Authority grow and lets me keep bringing you this kind of content. All right, let's move to the second opportunity. And before I tell you what it is, I want you to think about something. What happens when an asset goes from being everyone's favorite to being completely hated in just a few months? What happens when the hype disappears, when the confident predictions turn into doubt, when people who were all in suddenly want nothing to do with it? Most people think that's a warning sign, but professional investors see it differently. They see capitulation. They see forced selling. They see weak hands getting shaken out. And historically, that kind of emotional extreme happens near bottoms, not near tops. So what am I talking about? I'm talking about an asset that's down nearly 50% from its peak. An asset that was everywhere just months ago and now nobody wants to talk about. An asset where hope has completely disappeared. I'm talking about Bitcoin. Now, before you click away, hear me out, because this isn't about whether you love crypto or hate it. This is about recognizing opportunity when sentiment reaches an extreme. Let me ask you this. A few months ago, when Bitcoin was making new highs and everyone was predicting it would go even higher, were you excited? Did you wish you had bought more? Well, this pullback is exactly what you asked for. The problem is, it doesn't feel good. It never does. Markets don't bottom when everyone is excited. They bottom when hope disappears, and right now, hope has disappeared. Think about what Bitcoin actually is for a second. It's a decentralized store of value. It's digital scarcity. Whether you love it or hate it, the adoption trend has been moving in one direction for over a decade. More institutions hold it now than ever before. More companies accept it. More countries are figuring out how to regulate it, which actually legitimizes it further. The infrastructure around Bitcoin isn't going away. It's maturing. But right now, the price action is brutal. Leverage is getting wiped out. Weak holders are panic selling. Margin calls are forcing people out of positions. And historically, that kind of forced selling happens near bottoms, not near tops. Here's a simple way to think about it. Imagine a rubber band. When you stretch it just a little, nothing happens. But when you stretch it really far, it eventually snaps back hard. That's what's happening here. Prices have been stretched so far below where they normally trade that even a modest recovery creates a significant upside. Now, I'm not saying Bitcoin is going to the moon next week. I'm not saying you should bet your entire portfolio on it. What I am saying is this. If you wanted exposure to Bitcoin at lower prices, this is what that looks like. The challenge is that it doesn't feel good. Buying when everyone else is scared requires discipline. It requires you to separate emotion from logic. Here's how to think about it practically. Bitcoin doesn't have earnings or free cash flow like a traditional business, so valuation works differently. But it does have scarcity. There will only ever be 21 million Bitcoin. Demand is growing. Supply is fixed. Over a long enough time horizon, that math works in your favor. The question is whether you have the stomach to hold through the volatility. If you're going to allocate anything to Bitcoin, keep it small. Maybe 2, 3, 5% of your portfolio, depending on your risk tolerance. And if it drops further, you're not panicking. You're adding. That's how asymmetric opportunities work. You risk a small, controlled amount for the potential of a much larger gain, but you have to be patient. You have to be willing to sit through the noise and the negative headlines. That's the price of admission for opportunities like this. Now, before we get to the third opportunity, I want you to think about something. The opportunities that feel the most uncomfortable are often the ones that pay off the best. If everyone agreed with you, the opportunity would already be priced in. The fact that most people think software and Bitcoin are too risky right now, that's actually a good sign. It means sentiment is washed out. It means expectations are low. And when expectations are low, it doesn't take much good news to spark a rebound. All right, so what's the third opportunity? And again, I'm going to make you wait just a second because context matters. Think about what happens when the market gets volatile, when uncertainty rises, when people start worrying about recessions and crashes. Where does money go? It doesn't disappear. It moves. It rotates into defensive sectors, into businesses that don't rely on economic growth to survive, into companies that sell things people need no matter what. And right now, there's one sector that fits that description perfectly, a sector that most people find boring, a sector that got completely ignored last year because everyone was chasing high-growth tech names. But this year, the rotation is happening, And this boring sector is quietly moving higher while everyone else is distracted by the chaos. I'm talking about grocery stores. I know. Grocery stocks? Really? But hear me out, because this is where smart money hides when volatility picks up. Think about the business model for just a second. People have to eat. Recessions come and go, markets crash and recover, but grocery stores keep operating. They have stable revenue, they have massive customer bases, they have essential products that people buy no matter what the economy is doing. It's not sexy, but it's predictable. And in uncertain times, predictable is valuable. Last year, the market completely ignored these stocks because everyone wanted growth. Everyone wanted the next big thing. But this year is different. Money is flowing into defensive names, and grocery stocks are benefiting. Take a large national grocery chain as an example. Low valuation, consistent cash flow, strong market position. These companies aren't going to double overnight, but they're also not going to crash 20% in a week. They provide stability. And here's the thing. This isn't even bottom fishing anymore. The move has already started. These stocks are already moving higher, but there's still room to run. 20, maybe 30% upside over the next couple of months is realistic, especially if market volatility continues. This is the kind of position you hold when you want lower risk exposure while still participating in the market. It's not going to make you rich quick, but it's going to protect capital and generate steady returns while other parts of the market are getting hammered. For investors who want to sleep well at night while still being invested, grocery stocks make a lot of sense right now. Now here's where I need to warn you about something, and this is really important. There's one area of the market that almost everyone thinks is safe right now, and it's setting up to be a trap. I'm talking about gold and silver mining stocks. Yes, gold has had a great run. Yes, precious metals feel like a safe haven. But here's the problem. When everyone agrees that something is safe, it usually isn't. These stocks have run too far, too fast. They're trading well above their normal valuations. Sentiment is too bullish. Everyone is piling in at the same time. And when that happens, the easy money's already gone. It's like showing up to a party after everyone's already been there for 3 hours. You didn't miss anything good, you just arrived late. I'm not saying gold is finished forever. I'm saying it needs to cool off. It needs to consolidate. It needs some of that hype to fade before it becomes an opportunity again. Buying something after it's already had a massive run just because it feels safe. That's how people get caught holding the bag when the momentum reverses. So let's bring this all together. We've covered 3 real opportunities that are setting up right now. First, software stocks that have been beaten down despite their businesses still being strong and essential. Second, Bitcoin at a sentiment extreme where fear has replaced hope and prices are stretched far below normal levels. And third, defensive grocery stocks that are quietly moving higher while providing stability in an uncertain market. We've also talked about what to avoid, which is overheated precious metal miners that have already had their run. None of this is financial advice. I'm not your financial advisor. I don't know your personal situation. What I'm doing is showing you how to think, how to separate price from value, how to recognize when fear creates opportunity instead of danger, how to be patient and disciplined when everyone else is being emotional. The investors who build real wealth don't do it by following the crowd. They don't do it by buying what's popular or selling what's unpopular just because everyone else is doing it. They do it by understanding the difference between short-term noise and long-term value. They do it by acting when others hesitate. They do it with a clear process, not random guesses, and they do it with patience, not panic. If you're watching this video, you're already thinking differently than most people. You're not just looking for hot stock tips. You're trying to understand the framework, the process, the logic behind the decisions. And that's what separates successful investors from everyone else. If this breakdown gave you a new perspective or helped you see these opportunities more clearly, make sure you're subscribed to Market Authority. We put out content like this regularly, all focused on helping you think like a professional investor instead of reacting like the crowd. Check out the other videos on the channel. There's a lot more analysis like this waiting for you. And remember, the goal isn't to get rich overnight. The goal is to build wealth systematically, intelligently, and patiently over time. Thanks for watching. I'll see you in the next one. This content is for educational and informational purposes only and should not be considered financial or investment advice. Always conduct your own research and consult with a qualified financial professional before making any investment decisions.